Hi there, welcome to Kneppy Invest. In November 2021, I did a video on PointsBet, not the sort of company I would take a position in. And at the time, there was not much to like, in my opinion. Share price had moved into a downtrend. Share price had fallen from something like $17 to $8. The market cap was still $2 billion or over $2 billion at the point in time. And not only that, this company was burning through lots and lots of cash. So I put PointsBet on the back of my watch list, and I just wanted to wait just to see how this company and how management can transition this company from a company that's burning through a lot of cash to an operating cash flow and free cash flow positive company. And I thought I'd have to wait a little bit. And today was the day I've decided to touch upon how BetsPoint is performing. Now, one way you can determine how a company is performing financially is just by looking at the chart. And the chart for PointsBet is absolutely abysmal. In fact, the share price has fallen from $8 to about $1.20 since last time I did a video, which makes me think that this company is not moving towards that very important inflection point of becoming operating and free cash flow positive. And there is also the possibility that things have become worse for this company. Now, PointsBet is in a really, really highly competitive industry. The wagering industry right now is highly competitive, all because of what's happening in the United States. Now, traditionally, wagering falls or sports gambling falls upon the states. And most states maybe not made, but they decided that sports gambling was going to be illegal, maybe except for Nevada. And then slowly over the last few years, slowly and gradually, more and more states are legalizing sports gambling. And that's why it's highly competitive, because all these companies like PointsBet and a lot of their competitors are much bigger than them. They are rushing out there, spending a lot of money, and PointsBet is spending a lot of money advertising and marketing to attract as many customers as they can. Now, I would not consider PointsBet to be like a tech company, because if you take a SaaS company and they win a customer, it might be sticky. That customer might stay with that SaaS company for a while. You can't say the same thing about gambling. In fact, I would say that most gamblers know all these betting sites and they will try to find the best price for any sport event they want to put some money on. And whether PointsBet gets that bet from that gambler all depends on their prices or their odds. So that's a very important distinction to make when it comes to PointsBet. They really don't have any moat or competitive advantage over their competition. That's why they're spending a lot of money on advertising and marketing just to get the name out there. So people hear the name PointsBet and think, oh, maybe I'll see how PointsBet putting the odds of that game I want to bet. And also, there's also sites out there where you can compare all the odds of individual sport events. I'm pretty sure PointsBet would be part of those pages. In fact, the first time I heard PointsBet mentioned on a podcast, it was an American sporting podcast, and I talk about betting. And there was about a group of 4 podcasters who liked this one game, and they just went online to see which agency or odd platform had the best odds. And the platform with the best odds for this particular event was PointsBet. So that's the way gamblers think. Where can I get the best odds? And most of the time, it's not going to be PointsBet. I did read somewhere that PointsBet is trying to get into gaming and those sort of things. I think it was mentioned in one of their presentations or their annual report, something like that. But this company is primarily an online bookmaker, listed on the ASX, 12th of June 2019. Really good times from when they listed all the way through to late 2020, early 2021. And you'll see that in the chart, a fairly classic Matterhorn-looking chart, which we see a lot in many tech companies right now. The largest shareholder is SIG Sports Investments. I don't know anything about that company or whoever fund manager or whatever they are, but they have a 12.6% stake in PointsBet. If you do have a look at other shareholders in this company, there are some interesting shareholders, including the Norwegian Sovereign Fund, and also NBC Universal. And I believe NBC Universal is a shareholder of PointsBet because there is an agreement between PointsBet and NBC Sports Universal. Now, the last time I did a video on this company back in November 2021, the market cap of this company was $2.1 billion. That was at a share price of $8. Now, the share price before this was as high as about 16, 17, maybe even higher, which means at one point in time, the market cap of this company was well over $4 billion, unless they did the massive capital raising, which might have, which might mean the market cap wasn't quite that high. But you can just see by looking at the market cap, how it's dropped in the past 14 months, and looking at the share price, of course, how it's dropped in the past 14 months. It has not been, or 16 months, it has not been good times for shareholders. Market cap right now is $378 million. That's at a share price of $1.23. Now, interestingly enough, this company has a lot of cash on hand because one good thing that the management did when the valuation of this company was really, really high is they did capital raisings. And that is the time to do capital raisings, not when the share price is an all-time low, but when the share price is an all-time high. So they did capital raisings when the share price was much higher than it is now, raised a lot of capital, and they are still burning through that capital right now. And they've still got a long way to go. But because they are net cash by a fairly large amount, the enterprise value of this company is just above zero. That's at a share price of $1.23. At the start of trading on April 11, the enterprise value of this company was actually negative. Now, this tells me that the market is fairly confident that PointsBet will eventually burn through most of the cash they have had on hand right now. Because if they don't burn through that cash and transition to becoming an operating cash flow and free cash flow positive company, this company is awfully cheap at an enterprise value of $7 million. And the ticker for this company is PBH. The managing director and group CEO of PointsBet is Sam Swannell, and he has extensive experience in the wagering industry. In fact, he started his life in this industry as a national sales manager with Tasmania, and then he moved to TomWaterhouse.com. In fact, it states here that he successfully managed the startup of both TomWaterhouse.com and PointsBet. And he was the chief operations officer at TomWaterhouse.com. And then TomWaterhouse.com was bought out by William Hill. And then he made that transition to PointsBet. So he is a sort of CEO you want in charge of the company just based off his extensive experience. So that is one positive when it comes to PointsBet. I do like the management of this company. Now, let's go back in time to November 2021 when I last did a video. And at that point in time, the most recent quarterly results was the September quarter for financial year 22. Now, at this particular part in this company's life, they had $699 million of cash because they just did a massive capital raising. In fact, that capital raising was a reason the cash on hand increased from $276 million to that $700 million, or $1 short of $700 million. So let's have a look at how they performed in this particular quarter. Receipts to customers, $72.4 million. And remember, this is one quarter. So if you think a company can be or should be operating cash flow and free cash flow positive and profitable, if they had $72.4 million of cash receipts or revenue in one quarter, PointsBet is the sort of company who you would be horrified with. Because let's have a look to see how this company has performed from that September quarter in financial year 22 to the December quarter in financial year 23. So we're talking about 5 quarters removed. Now, receipts to customers have improved. In fact, they've increased by $33 million up to $105.8 million. That is a significant amount of receipts for one quarter, and for the 6 months to date, $187 million. But this company is still burning through lots and lots of cash. In fact, advertising and marketing costs up $21 million from 5 quarters ago. Staff costs up $6.3 million from that quarter, September quarter, financial year 22. And product manufacturing operating costs up $28 million. So if you just add up those 3 increases in costs, that comes to about $55 million. So receipts up $33 million, expenses in those 3 areas up $55 million. So yes, this company is burning through way more cash. And in this particular quarter, they were operating cash flow negative by $58.7 million. In the first 6 months of the financial year, they were operating cash flow negative by $103.6 million. And this is the reason why this company has an enterprise value just above zero, because they're burning through lots and lots of cash. And even though they have $387 million of cash on hand at the end of this quarter, the market just expects that cash on hand to dwindle through time. But if management of this company can surprise us and the market by becoming operating cash flow positive, even not operating cash flow positive, but significantly decrease their cash burn, I think this company would be cheap at these levels. But that's a big if. Now let's have a look at the half-year results for financial year 23, really focusing on the first part of this financial summary. This would have been found in their media release, if I remember correctly. So revenue up 28%. That's a nice increase in revenue, up from 39 million to 178 million. But this is a massive bar. EBITDA loss of 149 million. Net loss after tax of 163 million. Not only are those horrible reading, but they were worse than 1 year ago. So even though this company has increased their revenue, have increased their cash receipts, they've also increased their spending. And in fact, their increase in spending has been greater than the increase in revenue and cash receipts. And that's not a sustainable business model. Now, one thing I do like to look at for every single company is their breakdown of revenue into the different divisions or different geographies. So this is a breakdown of PointsBet. I think this is revenue and EBITDA by their geographic region. So we're talking about Australia, United States, Canada, and technology. Interestingly enough, revenue in Australia actually fell slightly, but it did fall from 97.6 million to 95.3 million. Nice growth in the United States, almost doubled from 40 million to 75 million. And they have started operations in Canada, went from 0 to 6.7. But even though this is an Australian company, and you might think that the expansion into the United States and Canada is one of the reasons they are burning through lots of cash. This company is still EBITDA negative in Australia, and in fact, it's got worse, and highly EBITDA negative in the United States and also Canada. One thing to like about PointsBet is their receipts or revenue history. One thing I like to see for all companies is receipts or revenue growing through time. And this is the cash receipts history per quarter for PointsBet since they listed on the ASX way back in the middle of 2019. And receipts have grown from 7.4 million to 105.8 million. That's a really nice increase in receipts. Now, there were some concerns that receipts and revenue were going sideways the last 4 quarters up until the most recent December quarter, because receipts in the December quarter last year were 90.4 million, and then they just went sideways, in fact, down a little bit the next 3 quarters. So this was a good quarter in terms of maintaining that growth in receipts up to 105.8 million, the record quarter for this company, and the first quarter this company has seen receipts over $100 million. Now let's have a look at some charts for PointsBet, and this is the weekly chart going all the way back to when they listed on the ASX. And this is a classic Matterhorn pattern that I just invented. I've actually mentioned the Matterhorn pattern in a recent video, but you do see this pattern a lot right now because a lot of tech companies saw the share price run up really hard in the second half of, after March 2020 into 2021. The share price high for PointsBet was a little bit before most tech companies. In fact, the share price high for PointsBet was in early 2021, almost 1 year before everyone else. And the share price high for this company was just shy of $18. And ever since then, the share price has been falling. In fact, it's fallen from $18 or just short of $18 to a current share price of about $1.23. And the share price is moving towards the March 2020 lows, the COVID-19 panic lows, which was just around about $1. So no end in sight when it looks like Well, no insight when it comes to the downtrend, and that will become clear when we look at the daily chart. So let's have a look at the daily chart now. And this particular daily chart goes back to February 2022. So just over 1 year of price action here for PointsBet. And this is a classic downtrend. Share price has actually been a downtrend for about 2 years or so. And if anyone who was skeptical about technical analysis, skeptical about downtrends or uptrends, all you had to do is show that person this chart to define what a downtrend looks like. A beautiful, defined downtrend. There was one little rally in the share price from June through August. Now, remember, June was the overall bottom in the market, and then there was that rally, and PointsBet share price actually went from about just under $2 all the way to $4. So share price actually doubled in a fairly short period of time. But there wasn't high volume during that little dead cat bounce, and that's why the share price kept on falling. In fact, share price fell well below those June's low. On a couple of occasions, we have seen a share price get close to $1. That COVID-19 low, we saw that towards the end of February, and on that particular day, probably when they released their half-year results, there was a lot of buying that came in when the share price reached about $1.05. I do remember that day and was surprised by how much buying there was when the share price did fall to those really low levels. But since then, the share price has continued its drift down. And even though it's still above $1, I think if the share price does fall below that support level, that COVID-19 low, that would be a very bearish sign for PointsBet. That's all I have in this update for PointsBet. I'd love to hear from a shareholder of this company, particularly a shareholder of this company who has been one for quite a few years. And I'd like to hear the bull case for this company. I am struggling to find a bull case. I always try to find bull case no matter the company, and I'm struggling with this company at this point in time. So I would like to hear someone who is bullish in regards to PointsBet. So leave your opinion if you are bullish in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.